The Federal Reserve is expected to raise interest rates again on Wednesday after taking a pause. But the higher rates are already having an impact on home sales here in the Chicago area.
So let's talk about it. Joining us now is David Hochberg. Of course, you know him from the radio. He's the Vice President of Mortgage Lending at Team Hochberg, Homeside Financial. Thanks for being with us.
Thanks for having me, guys.
All right, let's get started. You've got this weird situation going where obviously people are skittish about taking out a new mortgage because rates are higher, but also homes are selling for higher prices.
Yeah, it's crazy. 71% of homeowners in the United States have rates under 4%, and 26% of those homeowners have rates under 3%. So when you look at today's market, we're solidly in the sevens right now. So there are 5 reasons that homeowners are leaving: death, divorce, retirement, financial challenges, or what we're seeing, a lot of family members are moving back home because they can't afford to go buy a house in this market. So those are the top 5 reasons that we're seeing right now.
But what about the fact that you can get a lot more for your money, in your house? Because I feel like houses in my neighborhood, in your neighborhood, on the way to work here, they go up and they're sold within a day.
3 days, yeah.
Higher than the asking price.
Yeah, it's crazy out there, because now what do you got? We're in August, right? Or July, August. You've got to get your kids registered for school.
Right.
So now it's even a bigger feeding frenzy, because you need that address, you need that zip code to go to the school to apply to register your kids for the school. So right now, it's just a complete jailbreak with values, with the limited inventory. Here, I'll give you a perfect example. In Northbrook, we typically have about 90 homes on the market. I live in Northbrook. Today, it's around 30. St. Charles typically has about 400 homes on the market. Today, 90. So in Northbrook, we have 1/3 the inventory. St. Charles, you've got 1/4 of the inventory. So what's happening? You've got more people going after less of a product because there hasn't been a major boom. And those sellers that used to go and move up into another home, oh, we've been here 7 to 10 years, let's go buy another home. They're stuck in a 3% loan right now, or a 2-point-something% loan. They're not going to dump that to go buy something else.
Well, if you have the flexibility, what about waiting? What about selling high and then waiting to buy again?
Okay, so those that waited in 19 for it to come down at 20 got squashed. Those in 20 that waited for 21, you got flattened, the 21 to 22. So the past 4 years, if you waited, you gotten smashed. And then the other challenge that you have is, I've got a client right now in downtown Naperville, hotter than hot. He's living in $1 million home. He's like, yeah, my wife wants to move to Aurora, one level. I'm like, why are you doing that? You got 2.625% loan. He's like, that's what I said. He's like, well, my wife wants to move. I'm like, all right, start packing. So instead of putting that house on the market, his mortgage payment all in is $3,500. Downtown Naperville, he could get over $6,000 for rent. So what he's doing is, so that puts a further log jam in. He's renting his house out that he typically would have sold and bought Aurora for cash because he's got $700,000-$800,000 worth of equity. Now he's keeping it as a rental property. He's taking yes, he's moving into another home where it's costing him more money, but he's taking the $3,000 that he's making on the rental to offset the higher mortgage payment. So it's just a logjam, guys. I've been doing this 23 years.
Right. Your business can't be
I've never seen
right
it.
Now.
It's crazy. I've never seen anything like this. So unless death, divorce, financial malfeasance, financial challenges, you're retired and have to move out of state, or you got family moving in, you're really not moving right now if you own a home.
So we think interest rates are going to go up again on Wednesday, but is there a light at the end of the tunnel here?
Yeah, every time I hear that there's a light at the end of the tunnel, it's the 545 Metro Express, right? So everybody that makes these predictions, the rates will come down in June. That's what they predicted last November. How are we doing June? We're solidly in the 7s. We went up. Okay, so here's a challenge. We've got $968 billion worth of credit card debt in this country, which is crazy. It's the highest it's ever been. Why is that important? Because every time the Fed jacks up the rate, it tightens that screw a little more. Your minimum monthly payment on that $968 billion now costs you a couple more bucks. You go to get that new car loan. There it goes again. Okay, so everything that you're borrowing. Then here's the other thing. Ready? October, student loan payments.
Man, one more light at the end of the tunnel is a Metro train.
That then impacts your credit, which is going to make it so you're not getting as good a rate when you're going for your mortge.
Well, this has been cheerful.
Yeah.
Thank you for coming in, Dave.
Enjoy your week, everybody.
No, but
it is what, it falls in the category. Every prediction that everybody makes, here's what I tell them. When I go in the morning, I open up, and this is what every mortgage professional should say. We open up our computer, we see what today's rates are, and we quote today's rates. You can't fight the rates. If you want to buy a house now, you buy the house, you rent the rate, and you refinance in the future.
All right.
All right.
David Hochberg, thank you so much.
Thanks
We
for having me.
appreciate your
Good
time.
information, even if we don't like to hear it.
Coming up